morning everyone and welcome back to Morning Markets from True Potential. Yesterday, equity markets were lower across the board, and this was in response to concerns over future economic growth, along with concerns over the spread of new COVID variants. But these factors have been in the mix for some time. The FTSE 100 was off 1.7%, as was Europe, where the southern countries were particularly weak given their economies are more service orientated and vulnerable to setbacks from higher new COVID outbreaks. In the US, the S&P 500 was down just 1%, whilst the Nasdaq was off 0.7%, both now lower for the week after hitting fresh all-time highs in Wednesday's session. Overnight, Japan was also a little bit weaker, off 0.6%. On yesterday's Morning Markets episode, George highlighted that we'd hear from the European Central Bank in the afternoon, who would finally publish the long-awaited results of its existing monetary policy to test if its current framework is optimal. This follows after inflation has consistently undershot its target for the last decade, as you can see from the chart in front of you, the target being close to 2%, on which it's undershot. The deep dive review is aimed at challenging the core principles of central banking in the hopes of resetting strategy and bolstering credibility. In short, the most significant but perhaps not unexpected change is the modification to its numerical inflation target from below but close to 2% to a symmetric 2% target over the medium term. This is the third time the ECB has changed its definition of price stability. This long-term development marks a clear willingness to allow inflation to run higher than 2% before having to step in and raise interest rates and tap the brake pedal on inflation rising further. Also noteworthy were the comments around climate change in its core policy decisions in an attempt to curb carbon emissions. The revealed plans to tackle climate change risks by tilting its asset purchases and collateral rules away from heavy carbon emitting companies that are not aligned to the EU's climate goals. It also addressed soaring house prices by promising to incorporate the cost of owning a home into its inflation measure. But it will take several years for these measures to take effect. In terms of other key data, Thursday was a relatively quiet day. This morning we've had UK economic growth data for May, which saw economic activity increase 0.8% over the month. A little lower than expected, but the good news, albeit unsurprising news, is the consumer services activity rebounded strongly again, owing to the ongoing reopening and the likes of the hospitality and recreation sectors essentially back to where they were last summer. Manufacturing, construction and retail were a bit weaker, and this could be due to the ongoing global supply chain issues. In the bond markets, we saw the US 10-year Treasury yield hit below 1.3%, its lowest level since February. And in the UK bond market, the UK 10-year gilt yield is trading around 0.6%, so still very low compared to what we've seen in recent months. In currency markets, no real big movements. Sterling trading against the dollar at 1.38 and against the euro at 1.16. That's all for today. Thank you for listening and have a great weekend.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.